Welcome, folks. I wanted to jump in here and do a quick overview on Pinterest on a $4.5 billion bet that several investors are making in this stock. Now, the question becomes, how can we benefit from this information? How can we bet alongside the smart money doing similar analysis as they are to give us an edge in the market? So what I'm going to show you here is the actual analysis that I did today to take a position on Pinterest. And hopefully this helps you understand a little bit more of the process and have a specific point of reference, variables to consider when you're making investment in stocks. So the first thing I want to point out here is a chart of Pinterest. This is on a daily. You can see right here that on July 31st, 2020, the stock gapped up, and this was on their second quarter earnings report releases. They have better than expected report, and someone came in here and bought a large block of shares on July 31st. Now, this is a daily chart. If we zoom out and look at a weekly chart, you'll see that this is a lot easier to recognize. Okay, this right here is a weekly chart. Okay, and let me reference right here. This is the same period of point, the week of July 31st, 2020. So on the weekly time frame, you could see that the bars stick out more, and this accounts for 5 days of trading period. And in a weekly time frame, when you look at the volume, okay, look how many volume traded on the week of July 31st, 149.8 million shares. For simplicity, let's round to 150 million. Someone came in here and bought roughly 150 million shares at an average price. When we take the high and the low, right, we can basically say that the average price is around probably $30, right? For simplicity, let's just simplify the math. So how much is that? Let's take 150 million shares times an average purchase price of $30. That equals to 4.5 billion dollar, just gonna abbreviate, bet. Someone took, or several institutional investors accumulated and poured capital up to $4.5 billion in this position. Now, why are they making such a big bet? Okay. Now, let's look at another thing. Look at the market cap. As of September 14, the market cap of Pinterest is 20.8 billion. The 4.5 investment that was made in this stock represents 21% of the entire market cap. In terms of shares outstanding, 150 divided by 462. Someone came in and bought 32% of all the shares outstanding. So someone is buying this stock heavily. This is not your Aunt Sally, like William O'Neill used to say. This is not your friend or your uncle. This is institutional money that have an army of analysts doing a lot of research when they're making bet like this. So what kind of analysis can we do to help us better understand where can the stock go? What is the potential price target, and what are the institutional investors, the smart money, looking at? Okay, so let's apply first some comparable company analysis. Here we have competitors. You have Twitter, Snapchat, Yelp, Angie, Facebook, TripAdvisor, Alpha, AutoHome. I'm not even familiar with this company, so I'm not even going to spend time talking about this one. And here's Pinterest. Look at the revenue growth expected 1 year out. This is specifically 2021. And this information, of course, is provided by Capital IQ. Twitter, 1 year revenue growth, less than 1%. Snapchat revenue growth, 37%. Look at Yelp. Yelp is not growing. Look at the performance of the stock. Right here, this is stock performance. Yelp is down, okay? Money is flowing out of Yelp. Yelp primarily represents what? Restaurant. So that you could book a table or book a time to go and sit and have dinner with your friends. This sector of the economy, because of the shutdowns by several states, has hurted restaurants. And Yelp recently came out with reports that a significant number of restaurants have actually closed and disappeared basically from their platform. So this is why the stock is down. You have to understand the story behind these numbers. Okay, same thing with TripAdvisor. Look at TripAdvisor revenue growth, minus 31%. The stock is down 29.5%. These are the beaten sectors of the economy. Now look at Pinterest. Pinterest expected growth 32% in 2021, according to Capital IQ. Look at the stock performance year to date, 93%. Money is flowing into Pinterest. Follow the money. This is huge amount of capital inflow. So now that we understand a little bit of this, okay, and of course we have to also understand the business fundamentals of Pinterest, how their business works, and I'll let you guys do your own homework on that. But let's focus on calculating a price target. Okay, we're going to apply sales multiple valuation. Here's my expected revenue on Pinterest for 2020, 2021, and 2022. So for this year, 2020, $1.4 billion. That represents a 26% increase. In 2021, 1.9 billion. That represents a 34% increase. These estimates and forecasts are coming from Thomson One. So now that we understand how fast revenue are growing in an economy where different sectors are in depressionary environment, capital is chasing growth. Institutional money are putting capital behind businesses that are growing and have a higher probability of surviving and growing essentially, okay? So if we apply a EV over sales multiple of 15, where am I getting this 15 from? Well, I'm getting it from right here, right? Currently, the market is paying 15.5 times on an EV over sales multiple basis. Look at Snapchat, okay? Because Snapchat is actually also growing revenue 18 multiple. So Snapchat is trading at a higher multiple than Pinterest. So if we use this 15 and we multiply it by the sales, we get an implied enterprise value of the firm. We adjust for our net debt to get equity value, and we take the equity value divided by their shares outstanding, and we get a projected price target of $50.50. That's represent a 38% move this year. If we look at 2021 and we apply the same math to this, the same methodology, look at the share price a year out, 12 months out, $66 price target. That is an 82% potential return on investment or increase on the stock. And 2022, if we look out that far, $84.47 price target, which represent $132. Okay, so the institutional investors that are pouring in billions of dollars in Pinterest, their analysts are doing this type of work, but they're also going a lot deeper than what we're doing right here. I'm just showing you the process and what I am uncovering and finding out myself through my own analysis and my own homework. Now, who has been buying this stock? That's the main question. Who has been pouring billions of dollars into this name? Well, here it is, folks. The usual suspects. The top 10 investors. In this list, we have 3 of the largest mutual funds. We have Vanguard, we have BlackRock, we have State Street. Look how many shares Vanguard owns. 32.1 million shares of Pinterest. Look at Vanguard. BlackRock owns 10.9 million shares, and State Street owns 7 million shares. If we look at assets under management, Vanguard is managing $6.2 trillion. If you look at BlackRock is managing approximately $7.4 trillion. And State Street is managing approximately $2.5 trillion. When you add all of these, this represents $16 trillion of assets under management. This is your pension fund money. This is your 401k. This is the side of Wall Street that is managing America's retirement. And now you're seeing where they're putting a very small amount of that money. They're pouring it into Pinterest. Okay, so now that we have access to this information, then where do we think the stock can go? So in this slide, I'm basically now applying a little bit of technical analysis, Gartley pattern. Identify my A point, my B point, my C point, and then project and solve for my D point. So here's my A point, here's my B point, here's my C point, and my D point, as I projected here, is $48.57. $48.57. Now notice that over here, I have a $60 price target. Where am I getting $60 from? Well, it's a combination of the sales multiple calculation, okay, taking a blended approach, but also applying technical analysis and recognizing that the momentum of this stock is to the upside. It's in an uptrend. So now we're combining different variables. We're also combining different factors, and everything is lining up. Everything is in sync, in harmony, making the $4.5 billion investment look like it might pay out. And if these guys are in there, the smart money, I want to be in there as well. Okay? Now, let me also give you a different perspective, an execution game plan. So, what is my time frame on this investment idea? 3 to 12 months. Let's assume, hypothetically, that you buy the stock at $37. What will be your defined stop loss? $34. Okay? What is your expected target price? $60. That represents a 65% upside from a $37 increase. So, from a risk-reward standpoint, we are risking 3 points to make 23 points. That represents a 7.6 to 1 risk-reward ratio. In other words, per every dollar that you risk, per every point that you're risking, your payout is expected to be 7.6 times. Let's simplify this. Let's say that you have a portfolio of $10,000, okay? And you invest 20%, right? 20% position, okay? That is $2,000 invested in Pinterest. How many shares can you buy with a $37 entry price? So take your $37 entry, right? Divided by 2,000. What do we get? So 2,000 divided by 37, 54 shares. So you will buy basically 54, and I'm just going to abbreviate here, shares. Now 54 shares times 23 points, because from here to here is 23 points, right? From here to here is 23 points. So you multiply that by 23. What is your potential return? 54 times 23. That's $1,243, which represents total return on this investment. Divide the return by your portfolio. That's 12%, folks. That is a 12.4% return if this trade plays out. 12.4% on a 20% investment, it's really good. How much is the bank paying you? Zero. How much is a U.S. Treasury paying you? About 1.3%, but if you account for inflation, if you account for monetary policy and what the Fed is doing, you're practically getting paid in cheaper dollars. So not that many investments out there will pay you 12.4% to sit and hold a position for 3 to 12 months. Now imagine if you do a trade or an investment like this 5, 6 times a year. Now it's starting to make sense. Now do you see why the big boys are pouring in here $5.4 billion? Okay? 4.5 I should say. 4.5 there. Okay? So, what also can we use this information? Or if we apply hindsight as a case study for us to learn this approach and methodology. I have here a chart of Facebook. Look at Facebook revenue growth in 2013, 54%. Look at it in 2014, 58%. 2015, 16, and beyond that, okay? And look at their share price after their IPO date right here when they broke out, okay? And then the continued move to where they are at right now. But nothing goes in a straight line, of course. They go up, come down. They go up, come down. They go up, come down. Here's a major consolidation. Go up again, comes down, go up again. Then what do you think it's expecting? Probably a decline as well. So we can use Facebook as a roadmap of what the potential outcome or payout can be on Pinterest. You want to be in line with the smart money, okay? And lastly, so if you want to invest in stocks, you need to learn this process that I just shared with you. Number one, start with an investment thesis or idea. Number two, apply fundamental research. If it's company related, what is their product and service? What are sales growth? What are their margins? What are their EPS, product market fit, competition, etc.? Industry related research. What are the growth drivers? What is the industry size? What are other analysts expecting for the industry size and the market share of the company? Economic related data. What is GDP, unemployment, Fed policy, consumer confidence index, and so much more. Number three, apply technical analysis. Identify your inflection points. Look at daily, weekly, or even monthly timeframes. Identify your support and resistance. Look at the big picture, which we did. It's an uptrend on Pinterest. We use Gartley pattern to give us a projected price move or price target. Then how will you trade or execute your trade? I gave you a buy and entry point, a sell price point, price target, stop loss, risk management, knowing how much you're going to risk and what will be your stop loss, capital and portfolio weight allocation. Folks, this is what we just discussed right here, okay? Let me know what you think about this analysis. And do you believe that a $4.5 billion bet on Pinterest by some of the largest mutual fund in our country are making the right bet? And also let me know if this was helpful and will you make this bet, okay? What is the expectancy or probability of this trade? Probably 70 to 80% based on statistical historical analysis that I've done looking at patterns similar to this. All right, folks, I hope you found value. I hope you learned something. And as always, stay safe, stay healthy, and I'll see you in the next one.